Welcome to the Monday Money Tip Podcast presented by Fully Funded Life. My name is Joe Sengel, and I'm committed to helping you, yes, you, live your fully funded life. I'm joined today, as always, by my podcast co-host, Megan Hibbard. Are you fired up today?
Fired up. Happy Monday, or whatever day you find
Episode
yourself
number
listening.
353.
353. Can't believe it.
That's
We're
almost a,
closing on the fours.
yeah. Yeah, we almost have a
We're like,
year. If you listen to an episode every day, you would almost have one for every day. Hey, listen, everybody, today we are going to be continuing a conversation that we had from last week, and that is reviewing a study that was conducted by FINRA, which has a foundation, an investor education foundation. They do this every 3 years. They do it for people from all 50 states and the US territories, and they look at four major categories. And when we're thinking about those four major categories, what are those four categories again?
making ends meet, planning ahead, managing financial products, and financial knowledge.
Yeah. And so we talked about making ends meet and planning ahead last week. This week, we're going to talk about the next three. Managing financial products is where we're going to start. And something that I thought was interesting is in the United States, 94% of respondents report having a bank account, a checking or savings account. So in the United States, being unbanked is not a very huge deal. It is a huge deal. We want everybody to be able to have access to a bank account. It's a way of safely holding your financial reserves. In other areas of the world, being unbanked, some countries have 50, 60, 70% of people are unbanked. And that's a big, big deal because it gives people less control of their money. It creates friction in transacting financial transactions, makes it harder for people to invest in world and global and even national markets. Uh, so I thought it was interesting. Only 62% of people agree with the statement, I trust that banks will treat me fairly. Hmm. That means
Hmm.
38% don't fully agree with it. Doesn't mean they totally disagree with it, just mean they don't fully agree. So there's lower trust for those under 55, lower income, and Hispanic and Latino respondents. And so I think it's interesting. The survey noted that there's an age gap, an income gap, and a culture gap on whether or not there's trust in banks. That's interesting to me. What would you say about that, Megan?
I think some of the age gap, I don't think that surprises me. I don't know. I feel like different ages are different, have different thoughts on trust and not trust. Like, example, younger generations are way more likely to jump into new technology and trust things like that, whereas older generations aren't. And so I feel like I get that. And then I guess cross cultural. I mean, maybe it's just different cultures operate differently and have different thoughts about things. So, but that is kind of surprising, some of the numbers for sure.
Yeah, I
Mm.
mean, it could come from, uh, feeling like maybe they are first or second generation to the United
Yeah.
States,
Just like a
and
new
they've come
thing,
from a
maybe.
country maybe that was less banked or a place where there were
Yeah.
bank failures. I think the younger generation has heard a lot about bank failures, and they heard that, but they didn't comprehend that there's FDIC insurance and
Yeah.
some protections in place for consumers. But I just thought that that stood out. I also saw I was on page 10 of the report, and they did a study of behavioral signs of financial stress, and they looked at late mortgage payments, taking a loan from retirement accounts, taking a hardship withdrawal from a retirement account, and overdrawing checking accounts. And what I
Mm.
saw is that the data year over year, study over study, there's 6 studies in. There's studies done every 3 years that most of them have remained stable except
Yeah.
for the overdrawing the checking account. The
Mm.
overdrawing the checking account has returned to the 2009 levels at
Yeah.
24% of people occasionally overdraw their checking accounts. That's 1 in 4 people that responded, Megan, that they occasionally
Mm.
overdraw their checking account. Yikes.
Yeah. It is interesting. I wonder what changed from, like, 2015, 2018, it dropped down to 19%, which is still high. I mean, the change in over this whole period is not like, it's 26% is the highest, 19% is the lowest, so it's still, like, around the
Yeah,
same,
it's 1
but
in
I'm
5 versus 1 in 4.
yeah,
And
that is
I would
interesting.
say I'm guessing here, I'm surmising that as people had more
Surmising.
margin, which is proof there's been
Yeah,
more margin in the 2015, 2018, as there was economic expansion with very low inflation, that since COVID and the explosion of inflation, which we all know was due to the increase of the M2 money supply, they printed 3.2 trillion additional dollars and handed it out to everybody, which if you've ever looked at quantity theory of money means inflation's going to happen, and it
yeah,
did. And now all of a sudden food prices expanded exponentially and inflation puts a higher pinch on the dollar, more overdrafting.
I
I
actually
also did
thought it
think though. Go ahead.
I was gonna say, I actually thought it would've been higher than 24%, honestly,
Well,
so
I'm thankful that the 24% does not include me. I would have responded no to that, which I think is
mm,
helpful for people to know, uh, that that's not happening. And I will tell you the number one way that I have not had an overdraft is I balance my checkbook every month,
mm,
right? I do that. And I think a lot of people don't do that. I think they check their
yeah,
bank account balance, and we know this from the people we've coached. They check their bank account balance, and then all of a sudden they accidentally forgot that they had to write a check for something and they forgot it, or they had an automatic bill payment and they forgot it, and then it overdrafted. And they're like,
yeah,
oops. And that's why overdraft protection is such a big thing for checking accounts. I did
yeah,
notice medical expenses, past due medical bills has been basically flat, like totally flat, no change. But they did see a huge increase in the number of people who have health insurance. Starting with the Affordable Care Act from 2012 to 2015, they added 9% more people from 78% having health insurance to 87%. The highest percentage ever was in 2024, 89% of people have health insurance. I thought that's interesting. But let's talk about this with this idea of managing financial products. Tell everybody what percent of people use mobile devices to access their bank accounts.
in 2018, the lowest was at 65% for mobile banking, so with text messages, mobile apps, internet browsers, or email on a mobile phone, and it's jumped now to 2024, it's at 81%, which is
Right.
close to the 78% that we're at now with online banking with a laptop or a desktop, which that has stayed it's been like 84% in 2018 and then 80% and then 78. So it's actually people that are actually doing banking with a laptop or desktop computer is going down slightly, and people doing mobile banking is going up from 65 all the way up to 81%, which I think just reflects our current times that we're in.
It's
Like
the
the last
technology increases and the
yeah, the
adoption
last
of it.
goes, yeah. The last time we went to the bank, we just like depositing our checks. Like, it's just like we're going to town, we just go by this bank, and the lady, like, the teller was like, "Sir, you know we have an app that you can just, like, do this quickly." And Jordan's like, "Yeah, I know, but I just like coming by and, like, handing you my check to make sure." And she's like, "Well, like, soon you won't be able to do this. Like, you'll have to do the mobile app." And I'm like, I just can't see even these stats don't warrant that no banking and, like, this is, like, a very popular bank, like, that is in every city, like, it's not
It's a
like a random
national bank.
yeah, and
Yeah.
it just, like, caught me off guard because I mean, I'm all for technology and adopting to it and doing, like, all the mobile things, but, like, we're just been a little bit hesitant with some of, like, the mobile features, um, but I don't know, it's just interesting. She's like, you're not gonna be able to do this."
Then you're what they call a late adopter for technology. I will tell you, I switched to scanning the check with my phone and never
Yeah.
went back. Uh,
I don't it's
so I
just
think
weird,
it's
like,
interesting.
I
I
don't know.
wanted to point this out that the prevalence of mobile banking does not vary substantially by income or educational level. And so that what that I think speaks to is that just all income levels have technology in their hand. They have mobile technology in their hand, and it is intuitive enough that they know how to use it. Now,
Yeah.
I think it's interesting. We saw a statistic on credit cards that says the percentage who always pay their credit cards in full each month is 53%. That dropped by 6 percentage points relative to 2021, which had reversed a previous 5-wave improving trend. So the previous 5 reports had saw improvements, but with the increase of inflation, all of a sudden it's collapsed. And so that what does that mean? You
Hmm.
have way more people paying way more interest on credit card debt. And that just is an indicator of the squeeze that is happening for the American consumer. I
Yeah.
also saw it was interesting that 23% of respondents say they have used buy now, pay later services in the last 12 months. So,
Mhm.
somewhere around 1 in 4.5 people have have used buy now, pay later. That's where you go in, you say, "Hey, I'm going to pay this out over 12 months, some purchase at Home Depot." You go to the furniture store, I'm gonna buy now, I'm gonna pay it later, 24
Yeah.
months, same as cash type deals. Those are still attractive to people, but it is debt. It is a form of debt. And so we try to encourage people not to do that, to save cash and pay cash for it. You can still get a deal with that. I did think it was very interesting that homeowners that had a mortgage or home equity loan had declined from 71% down to 56% in 2024. It was
Mm.
71% in 2009. It's dropped all the way down to 56%. How crazy is that?
Yeah, that is crazy.
So 55% of respondents surveyed were homeowners. That's little change from the 57% in 2021. And only 56% of people of homeowners had a mortgage or home equity loan. That's amazing because 71% of people had a mortgage or home equity loan in 2009, which means 44% of homeowners own their houses outright.
Mm.
That's amazing. That's higher than I would have thought.
That is high.
Yeah?
Go
What do you
you.
think of that?
Go those people. That's great.
Yeah, pretty
Yeah. We
amazing.
should we should have them on the show.
Yeah.
Tell us how they did it.
I think it's interesting. They also did a study of what's called homeowners underwater. It doesn't mean flooded. It means they owe more than the house is perceived to
Yeah.
be worth. So
Yeah.
that's actually a qualitative question because people, it's been proven, don't really know what their house is worth. Um, it's kind of a tough thing to get to until you actually sell it, and that has declined from 14% being underwater in 2012 to 5% in 2024, which actually
Hmm.
shows there's health in the homeowner
Yeah.
market, that they actually have equity in their home. Any other things stood out to you in the study of financial products?
There's so much in this study. Like I would definitely encourage people to even like skim it because there's a whole section on this part on student loans, which is probably interesting to a lot of people. Um, but or they talk about I have too much debt right now, that feeling people have. It's interesting that it stayed somewhat consistent. It's dropped a little bit and then gone back up, but in 2012 it was 42% of people felt that way, and now it's at 38% up. In 2021 it was 34%. So it's creeping back up where people feel the weight of their debt and feel like they have too much. Right below that, it also talks about the feeling they have too much debt versus, like, having 3 or more types of debt. And so it's just interesting people feeling that way probably means they probably have more than one debt, but it's just I don't know, I feel like and it goes into credit scores, like, it's very interesting to, like, look through all of this and see all the data, like, I will be honest, a lot of times when I think data, I think snooze fest. I'm gonna be honest with you, it just doesn't get my heart pitter patter like it does yours as an engineer, but I do feel like this stuff is, like, interesting data where it's like, "Huh, okay, that's interesting. Here's where I fall in that," or "Here's where I'm in that," like, it's just interesting to, like, look through. Yeah, I don't know.
I think, for our, podcast listeners, we're going through this data and sharing it with you because, 1, this is a great way for us to figure out how to better serve the masses, right? We want to be able to provide information in this podcast that serves the most number of people well. And it helps us understand the trends that are happening in the economic and climate that we serve the most, which is Canada in the United States. And when we think about the final section of this study, it's financial knowledge and it's financial literacy. And our goal is to help equip you to be one of the ones that answers the question correctly. And one of the things that stood out to me is when people were asked a basic interest rate question, only 69% of people got it correct. And that's a high D at our local high school.
Yeah.
Only 69% of people got the mortgage question correct. That's a high D. And we got on an inflation question, only 58% got it correct. You know what that means? That's an F. We flunked. 41% got the risk question correct. 29% got the compound debt question correct. I mean, this is, you're going to have to take the class again level of responses. And if you want to prosper financially, you must become financially literate. And
Mm.
financial literacy does not mean getting degrees in this. Financial literacy means understanding the basics of money. Luckily, there are free calculators. We have tons of them on our website. They're everywhere. There's 20 new ones created a day. There is no excuse for not being financial literate on your mobile device, which apparently, Megan, people use a lot for their
They're using
banking.
it.
Just click on over
Yeah.
to YouTube and watch the Monday Money Tip episodes. Watch other great influencers that are teaching about money, and then ask yourself the question, do I understand that? Does that make sense? How does this apply to me? And I know that learning about money is nowhere near as exciting for me as watching a deer hunting video, or as I watched last night about the Mars Curiosity, rover episode that I was watching from PBS and Nova. Um, I mean, those are just just dumbfoundingly exciting. Uh, but you know what? Learning about money helps you have money so that you can go do more of the things that you love to do, that you can fund the things that equal a fully funded life for you, and remove you from having to answer the question, have I overdrafted? You don't have to answer that yes. And do I have financial anxiety? I can say I have very little financial anxiety.
Yeah, I mean, it's interesting. So in this, you can see like the percentage who answered 4 more questions correctly. And from 2009 to now, it's just a steady decrease. Like, it's so interesting that I feel like today in the world, there is more than ever, there's just constant knowledge and you can learn about anything anyway. Like, you can, like, on your phone, you can turn the TV on and learn it. Like, there's just all this stuff just coming at you all the time, which I feel like can be exhausting. But also, are we utilizing our time wisely? So,
No.
am I spending 6 hours scrolling on social media, but I would fail all of these questions, and I don't know. Well, maybe we should adjust how we're spending our time, and I think it's easy for people to do, the doom scroll where you're just there, you're there, you're there, and then all of a sudden you're like, "Where did that hour go?" I can tell you where it went. It
Yeah.
went on your phone. But,
Gotta set a timer when you're on TikTok.
but I'm just like, maybe you have a commute to work every day, or maybe you are in the car going to pick up your kids from school. Can you utilize that time? Because maybe you're like, I'm too busy. I don't have time. Okay. Well, you're in the car for an hour every day driving to and from work, or you're in the car for 30 minutes every day driving to pick up the kids and coming back and soccer practice and this. Can you utilize that time to learn about a topic like this from a trusted source? That's key. Making sure that you're getting your information from somebody like our team that you trust, whether it's the Monday Money Tip podcast or you're a fully funded Life Pro member, whatever it is, making sure that you're it's a trusted source, but can you utilize that time better because you have it and it's something that you're doing every day. Where are moments like that where you can get a pocket of time and say okay, I'm going to dedicate this 20-minute drive to pick up the kids and I'm going to put a podcast on or whatever so I can learn about budgeting, and I'm gonna do
Yep.
that, and then, like, it's simple stuff like that that can make a huge difference in this financial knowledge category.
Huge difference. I'll summarize my thoughts based on a financial education question, and they asked the question, "Was financial education offered by a school or college you attended or a
Mm,
workplace where you were employed?" 65% of people just answered a flat no.
hmm,
Our goal is to help get that to a 0, because if financial education is taught, a lot of these negative, yet consequential financial decisions, such as using payday loans, using buy now, pay later, using pawn shop loans, carrying interest bearing credit card balances month over month, as you provide that additional financial education, I think you'll see those decline. I also see that there's opportunities for us to do education in the areas of how to use various banking products, which is very important as you move from struggling to stability and on up to surplus. But the summary shows that margin creates financial confidence, reduces financial anxiety, and you know what we call that? That means you get to start living a fully funded life. So we really do encourage you to click the link. We provided a link to this Investor Education Foundation study, the latest one, Financial Capability in the United States. Uh, Take a look at it. And if you're in HR somewhere and you have employees, consider having a workplace financial education system. We actually provide that for a few organizations. We would love to do that for way more than a few. If you are a leader of an organization, consider getting fully funded life for your organization or some similar program, because just basic financial education will help your employees be less stressed, reduce anxiety, which means they can be more focused on what?
hmm,
Becoming more productive at work. If you're an
yeah,
individual, hey, you can take a step into fully funded life and you can trial it out, see if you like it, set up a Zoom coaching appointment, get that accountability, that encouragement, that education established. I think you'll be look back a year or two later and say, I'm so glad I did that. I thank you so much for joining us for this Monday Money Tip podcast episode, a different one based on a whole lot of data. Hope you weren't too bored. Hope you're educated and hope you're inspired to continue your own financial education. It'll help you have less financial anxiety so you can live your fully funded life. Hey, make it a great week, and we'll see you next time.